Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, January 24th, about 15 minutes after market close, 4:17 p.m. Eastern time to be exact here in Jacksonville. And man, did we have an eventful day in the markets today. A really big spike in fear, huge spikes in the CPC over the last couple of days. That's the put call ratio, as well as the VIX, the volatility index. We had a bad gap down this morning, continued selling pressure, and all of that just to have a really incredible recovery on an insanely volatile day. So as you can see, I pretty much just talked about what just happened. So let's quickly get into the performance here. G6 up almost 2%, which is mind-blowing when we look at the charts. You'll see a lot of these ETFs and individual stocks were down massively today. So for G6 to be kind of at the top of the list here for the indices, or for what we normally show here, pretty impressive. S&P up 0.3% roughly, Q's about 0.5%, Dow same as the S&P, mid caps up 1.8, Russell 2000 up 2.3. On market state, we do have corrections still here as of 118, but we have rally day one as we undercut those lows and have our first day of an attempted bounce or an attempted rally. Additionally, we did not move the long-term arrow here to red today, although the S&P did close below the 200-day, because of the hammer and the fact that we finished positive. We were down nearly 3.5–4% on the S&P today and finished green. We left that as yellow. We're going to give that to the end of the week, see what the weekly candle looks like and how things shape up before we make a move on that long-term trend. However, there are no changes to these as of now for the time being, at least. So market leaders, short-term and medium, all going to stay bearish, long-term staying at neutral. So before we get into the charts very quickly, this is myself, Hunter here. If you have any questions, please send me an email, whether it's about the indices, a level, more information on a stock, whatever the case is. Please feel comfortable sending me an email. I'm happy to communicate and answer any questions. Or you can email anybody here, Dan, Tim, Merrill, Alex, or Don at revereasset.com as well. So let's get right into it. Let's start with the S&P. And as you can see, that is quite a candle. So a really bad gap down that got worse as the morning progressed. And we don't often look at intradays, not a ton anyway, but I'm going to show you a 5-minute chart just so you can kind of see what this looked like here. So this is this morning, right when the S&P, or right when the market opened, you can see we closed at 438 basically here on Friday, opened around 432-ish, call it right here. So down about 1.5%, 1.3% this morning. And you can see it just kind of drip, and got worse as the morning progressed. And then you see the selling kind of peak here, and a vicious rally occurred to the upside. So a very, very wild day intraday for the indices and for a lot of stocks. And this is what pretty much all of the intraday charts are going to look like. So there's no need to go through all these on the NASDAQ or the Qs, the small caps and so forth. But I did want to show you this here. Just really nasty selling early this morning, and then boom, a really sharp move out of that. So S&P, like we said, closed just slightly below the 200-day, but not by much. So just about 0.5% or so from getting back above that. You see all the moving averages beginning to slope down here. So the 8 will begin to catch up here. We'll see what happens as we kind of get into this 440, 450 area here on SPY. This 420 area is basically the low today. So a really strong bounce off of roughly 420. 420.77 is the exact low on SPY today. QQQ, and we are going to spend a little bit more on the indices today as we go through, just pretty important given the action. So QQQ finishes green after being down to 334, finishes at 354. So a $20 range on the Qs. You can look across the left side of the chart here, and you're not really going to see a candle that looks as wide as this one does. So a really crazy range for the Qs today. But this 350 level is what I want you to pay attention to. This is imperative here on the Qs, and this undercut and reclaim of this level may prove to be very important. This could just be an oversold bounce, a snapback rally, or it could not be. It's not my job to necessarily interpret that. My job is to watch price and see how this progresses. But I do know this 350 level here is absolutely imperative for the Qs, and the fact that it was able to get above it and close above it after the action today is a positive amidst some really negative days in the market over the course of the last week or so. So 350, a big level for the Qs. 334.15 is the low in the event that you're setting alerts. IWM, actually, let's go to DIA first. Excuse me here. So DIA, similar candle to everything else that we're going to look at here. This did have a much less decline as compared to the NASDAQ, the Qs, as it is the safer or the more value-oriented index. However, still not immune to the sell-off, at least over the last week or so, as you can see, starting about here on the 13th or so. Pretty brutal action here on the Dow, but just like we saw with the Qs and the S&P, putting in a hammer. This is a very important low now too, going back across the left-hand side of the screen. You see this 330, 332-ish area here acting as support. So same scenario. We're going to watch the lows of today on all of the major indices, but a positive to see these hammers across the board here. So IWM getting back up and into this really super important 200 level and actually closing above it, kind of equivalent to the 350-ish area, I would say, for the Qs, right? This 200 level, very, very big deal. Getting back above that and staying back above that is at least the first step towards some type of positive trend here. You do want to see what happens as we run up into these moving averages. That's kind of going to be the next big step here. As to what happens when we run into the declining 8, or what happens when we get back up into the 200. Are we harshly rejected? Are we able to get through those things? MDY, mid caps, same as pretty much everything else. You can see undercutting these lows, but as you can see here, this 465-ish area was kind of that last line in defense. Undercut that this morning, but finishing green like everything else, and actually finishing close to as good of a day as what small caps had, up almost 2% today. So big time hammers from the indices and big time volume on the indices. You see the volume here on the mid caps. I didn't really highlight it on the Qs, but I will show it again. 223% above average volume. This is pretty spectacular volume on these indices as well today. So let's get into the charts. Let's talk about some of the stuff that was strong first, some of the stuff that has held up well and still has constructive looking charts. And then we're just going to go through some of the most important charts in the market, in my opinion. So first, this is CF Industries, Chemical Agriculture Group. I've been talking about this group. Has a tendency to do these types of moves where it moves up quickly and then down quickly again, but big time relative strength today, up 3.5%, and really was showing relative strength all day long compared to the market. Oils, which actually held up pretty well. We did go long DVN today in Grotection. So we bought DVN. This is, in our opinion, the #1 oil stock, or at least oil and gas exploration and production stock. So we're long DVN. Some other really impressive names in this group: HAL, Halliburton. This is the oil and gas field services group. OIH is the ETF here. We talked about this last week a little bit, and maybe even the week prior. Some relative strength from this group last week, and specifically Halliburton and Schlumberger as well. So a couple more quick names here: XOM, Chevron, or Exxon and Chevron, both really not pulling back much at all. As you can see here with Exxon, really didn't give back anything, while the markets have given back quite a bit. I'll show you Chevron. It's going to look very similar. Didn't give back a ton. So the oil stocks, actually still some constructive charts out there, and we did go long oil today in Grotection. A couple of more here. Datadog, a beat up chart, really sold off, but nonetheless, some big time relative strength today, up almost 9% with some volume, reclaiming the 200-day moving average. It is one of those names that has held up better than the others, which is shocking considering this is still a pretty significant pullback, almost a 40% pullback at the lows here. So, but what we're doing here is we want to show you what was strong today and what was standing out. And so Datadog, one of those that had persistent relative strength pretty much all day. Sector-wise, we saw home builders show some relative strength, up almost 4%. We saw semiconductors, believe it or not, on a day where the Qs were down almost 5% at one point and finished green. I want you guys to think about that. And then also the Qs were down almost 5% at one point, and semiconductors were up over 1% at the end of the day. So just all around a pretty mind-blowing day. in a lot of areas. XRT retail having a super hot day on some news, I believe with Kohl's regarding some private equity stuff, kind of sparked the whole group. But a big time day for the retail ETF, which had a really, really awful start to the year. Let's go through some of the mega stocks real quick, just to take a look at how they acted today. Some of the most important stocks in the market, I would call them here. Tesla was down 9% at one point today, all the way down to 850. Excuse me, finished at 930. So finishing at the top of the range, not quite green like the market, but Tesla trying to get back to green and fill this gap too. Nvidia, another important stock to the market here. Similar story as far as just some nasty action, not immune to it over the last week, really is where it got really bad here. Going back to the 14th, and then here you can see Nvidia from 270 to the lows of 208 to, excuse me, today. But undercut and reclaim of the 200-day moving average. That's something that's worth paying attention to here on Nvidia. A couple of more of these big names here. I'll show you some of the other semiconductors. AMD also bouncing off the 200-day, or a small undercut and reclaim here of the 200-day. And I'll show you one more semiconductor just in the semi equipment space. Applied Materials trying to reclaim its 200-day as well, as you can see here, up about 3% today. So there are some signs of some life maybe out there in some of these bigger names, some of the semiconductor names. And I will show you Apple as the last one here. Does have earnings coming up pretty soon, along with Microsoft. But Apple, pretty nasty gap down today too, which had acted like a money market, had been holding up really well up until about here, and then it kind of fell apart too. But this is certainly one of the most important stocks to the market, and getting back above this 160 level here, I wanted to highlight, somewhat important too. So let's go through real quickly here, and this is going to be the last thing I cover, just a handful of names, but I do want to show you some of the volatility that we saw today in some of these G5 more speculative names, or G6, excuse me. So first we're going to start out with Coin, and I want to show you Coinbase because this is a pretty incredible candle here. So the low today for Coinbase, 162, closed at 192. So we're talking about a $30 range here. This is a stock that was down almost 20% today, that finished almost green. So I'm just showing you this because there was a lot of this out there today. Affirm is another example, and I know we've talked about these and how much they've come down off the highs, things like that. But Affirm was down 15% at one point today, finished green, finished up 1%. A couple more here. Upstart was down to 75 at one point today and finished around 91. So just some really insane ranges today. Maybe it's capitulation, maybe it's not, but I do want to show you a couple of these charts just so you can kind of see what we're talking about here. The Trade Desk, another one that had about a $10 range today, low of 55, high of 65. That's nearly a 20% range, about a 15%. Lending Club, another one, a former fintech favorite too, a low of around 1880, high of around 21. So just some really wild volatility today, and it certainly was in the indices too. We did see the VIX spike up to 40, which is traditionally a very high reading. You don't see a ton of readings over 40, and we have seen the put call ratio, the CPC, spike up to the 1.3-ish area, which we don't see extremely often, or at least we haven't over the last 15 months either. So there's just some other indicator information that I'm bringing to you guys, just to kind of put a little as a feather in your cap here at the end of the video. But that's going to wrap it up. I will see you guys on Thursday's video, and I will see you on the podcast. So I hope you all have a great week, and I'll talk to you soon.